Hello everyone and welcome to Student Fund Manager. I am Sardar and in this video we are going to talk about our weekly returns for the first week of May, which is from 1st to 5th May. So in this video we are going to talk about weekly returns, then our indexes, then our comparison against Nifty 50, then the market outlook, and finally our portfolio decisions. So coming to weekly returns first, this week we have experienced losses of 192.26 rupees and our current assets under management is 5,14,812.38 rupees and our total returns index has gone down by 0.0377 or 0.04%. And over here you can see how our total returns curve looks like since inception. So the formula for calculating indexed returns, so the value starts at 100 for all the indexes and it is multiplied by periodic returns to keep track of the returns. So in our case we are using daily returns to monitor our fund performance. So what we are doing is we are adding our daily returns to the previous index value, which will give us the current index value. So the index value started at 100. So suppose we have gained 5%, so we add 5% to 100, which is 105. So like that we are calculating our returns and we are keeping track of the trading value. As a result, any other discrepancy in tracking our equity returns is avoided. And lastly, returns are calculated on assets. So for example, in our equity returns index, the returns are only calculated on the stocks as well as the gains, losses or dividends that we are receiving. However, we are not taking into account brokerage charges or cash reserves in calculating the returns. However, TRI or total returns index is an exception because over there we are also calculating the brokerage charges as well as the cash reserves. And coming to the list of our indexes, first we have our focused index, which is equity returns index, or I like to call it scary. And I'm focusing most of my energy and attention into this index. And next we have debt returns index. Then we have mutual fund returns index for the mutual funds that I am distributing. And finally, we have total returns index, which keeps track of the entire portfolio as well as any other cost that the investor is bearing. And this is how our index curves look like. So you can see that our best performing index by far is the equity returns index, and then we have our mutual funds index, then comes our total returns index, and finally we had our debt index, which is not doing so well right now. However, over time I know that this index will be doing much better. And since the inception of the index, you can see that our equity returns index has performed much better than Nifty 50. And over here also we have performed much better than the Nifty 50 index. And this is how our equity holdings performed against Nifty 50 last week on a day-wise comparison. And coming to our market outlook, we can see that the RSI is rising, which is bullish. Then we can see that the index is above the most traded volume in the last 1 year, which is somewhere around 17,780, and the price is also above 2200-day exponential moving average, and our estimated weekly range is 18,350, which is the upper limit, and 17,850, which is the lower limit. And our outlook currently is moderately bullish on the market. And coming to our decisions, we are going to monitor our holdings for now. However, I am looking to short some of our holdings on intraday basis to protect our profits. And in the next video, I will be talking more on our current holdings as well as the performance improvement strategies. So that was all for today's video. Thank you so much for watching and I will see you next time. Take care. Have a great trading week. Bye bye.